Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on what is this today? Tuesday, the 27th June. Hope everybody is having a good week. Very choppy trading. As you know, we had a run up this today. The fact that the markets could not push lower, I think, created some short covering today. You didn't quite get down. Let's get into the charts real quick. Everybody should have your charts up so you can pull up. If you look at the S&P, I think I mentioned this level 43.61. Didn't quite get down there in the last day or so. And then we just had a rally back up to resistance 44.25. Generally, again, it's going to really, tomorrow is going to be the tell to figure out if this was the actual pullback, and then we resume the up move here. If we can break above 44.25 on the S&P futures, I think we probably go out and try to test the highs. Interestingly, the SPY, which I've been talking to you guys about, did actually come down and hit that 30 level, 31, and then bounce. So again, if you haven't done so, I think I've mentioned this the other day in my other videos, you may want to look at the SPY to kind of find out, maybe get you a little bit of an edge, because sometimes the futures levels don't hit. In this instance, it was more or less the SPY level that hit. Okay. Tomorrow we have a bunch of central bankers. There's an ECB forum in Portugal. I don't know if that's going to impact. What was really more notable than anything today, the NASDAQ also caught a bid. Didn't quite get down. Remember, I was mentioning our level. We were trying to get long 14,786.75. Never quite got down there and had another rally. We are up against resistance 15,200. Similarly, I would just deem this a bunch of, just lots of back and forth trading. We are in some S&P puts. I think I mentioned that on Friday. We're taking a little heat on those right now. We'll see how that goes as well. We did just kind of mention the positions we're in. We're still in that gas in the KOLD. That is rolling over. It's kind of just meandering. That is, we have inventories on oil, which, by the way, we did short oil. We're coming in short oil today. We shorted that overnight. So that's working out so far. It's generally just choppy overall. Just kind of looking at, if you look at your chart of oil, we basically have resistance now at around 70, and we have a new support at 66.72, which has been the prior two lows. We did close near the lows. We are short TTS. We are looking for a break below 66.72 and possible retest to that major pivot low in oil down around 63.71 was that pivot low there. So first things first, we got to break below 66.72. Nat gas similarly on looks like on the August contract, which is now the front month, $3 is acting now as resistance as well after a big run up. So that would actually benefit our position. We need that thing to rally above 3 so that we could make some money on our position there. It's out till Friday, so it's short dated options on that one. Most notable today, by the way, and I've been talking about this, interest rates. The 2-year, I don't know if you guys watched the 2-year ZT on, that's the /ZT, did make the yield popped up and made a high. The price made a low going back to close to the March low. So it's actually, on the charts, if you look at your charts of the 2-year 101.10, we're sitting, we just broke the low. We had bounced off of 102 and we just broke below basically a new low headed down towards the March lows, which would be really interesting. The main one I'm looking at, in fact, if you look at your 10-year, we've been talking about how choppy it's been and just kind of range trading. Still haven't, still okay. I mean, it's just been just clearly 113.16 to 112.16, 1 point range, very, very discernible range on the 10-year. But if it does break 112.16, I think that it could, in fact, pressure stocks and stall the rally. That is something that is worth looking at. So if you haven't been looking at the bond market for now, the market seems to be ignoring because again, we haven't really, other than the 2-year, and today obviously it didn't matter to the market. It's more or less the 10-year that is going to be more impactful, especially for the banks. I think that may impact some of the banks and so forth. So watch that 112.16 level on the 10-year. I think that's going to be important. Let me just pause real quick. I have a class coming up Thursday. I tweeted about it the other day. If you haven't seen the tweet, more about long-term investing, and that really is important. One of the things, again, market over time, not timing is obviously important, but if you're looking for some type of retirement kind of strategy, I'm not a financial advisor or whatever, but I do believe that over the long term, being in this business for 30 some odd years, especially if you have some young kids that you want to get them to invest. I have two boys, 20 and 22, and you got to get them started early. And one way to do that is to learn the different strategies, especially if you have 10, 15 year time horizon. There's no better way other than real estate, long-term investing in the SPY. All you have to do is look at a 50, 60 year chart of the SPY, and know that that's been probably one of the best wealth creators, and continue to stay long instead of just trying to be in and out, because as you know, that's just short-term stuff. So in any event, if you're interested in that, the class is this Thursday. Hit the link below. I am filling up. I'm actually doing these classes now, and I'm keeping it very, very small so that I can personalize the students. Also, it's a 1-month extended course, and everything will be recorded, so you don't have to attend live. So if you're interested in that, hit the link below. Okay, that is coming up this coming Thursday, 7 Eastern, 4 Pacific. If you're interested in preserving a nest egg, especially if you haven't really saved enough for retirement and so forth, or you want to educate yourself on how to stay in the market long term, I think this would be really beneficial. Over 35 years of doing this, this is what I've learned. So I will convey that to you if you have some interest in that. Okay, all right. Which again is really interesting, because I've had a lot of conversations from last year, which kind of segue into what I'm going to talk about right now, because last year everybody was bearish, right? And if you've been watching my videos from whatever, I always tell you that when the market is super bearish, that's actually when you want to start accumulating stocks and the SPY and everything else. Because again, if you stick around this for long enough, and I'm not talking about, you can have 6 months, like 2022 was a tough year for some folks. But if you stuck it out, and in fact, if you started picking up some stocks in October, November of last year, eventually, even now, I think a lot of people are surprised that the market keeps going up. You got to keep in mind that the market, the S&P, is designed to go up over time. They're taking stocks out that don't perform, putting new stocks in, and so but this whole notion that a crash is coming and all that. How'd that work out for you every time? So in fact, I love for a crash to come, because that's creates great opportunity for you long-term investors. Okay, so just that's my little 2 cents as well on that. By the way, hit the like button, hit the subscribe button, all that good stuff for the YouTube, so that I can keep doing this. Okay. All right. So just to recap, S&P, I think if we can break above 44.25, I think we're going higher. The VIX at 13 is still a little bit of an issue. Could we have, I was looking for just a shallow pullback. Didn't even come down to far enough for us to get long. And we bought we made a little money on SPY last week. We're essentially giving about a quarter of that back as of today. The market could, in fact, we got PCE, core PCE on Friday. We got all the Fed talk tomorrow. So we'll see if that changes anything. But generally speaking, we've done okay. We've also been, as I mentioned, Tesla. We've been kind of using it as a proxy. I haven't done anything on that for 2 weeks because the SPY options were so cheap. So we've kind of transitioned a little bit. Tesla is basically swinging. Hit 240, hit a peak of 280 to 279 and change. Let's call it 280. And so it's been swinging pretty good. But the whole thing with the strategy that we use is if it just swings back and forth, it's no good. We got to have some continuation of the move. And lately, if you've been trying to trade Tesla options, it's been very, very challenged. First of all, they're really expensive, and you have to be super nimble because, even like today, if you bought puts on Tesla, it went down to, 240 and then rallied sharply back up almost to 250 on the day. So again, back and forth trading is not great unless you're doing some really short-term stuff. And even the short-dated options going out to Friday, 5 points out of the money, you're still paying $3-4 on these things. So it's a bit of a challenge. The main thing for these type of volatile stocks is to have that continuation move and catch it. Obviously catch it on the bottom or the top, and then have the continuation. Because even if you bought puts last week, let's say you bought the 255s, those did really well, but you spent like $6 to go out to this Friday. They only have weeklies. Maybe they start doing dailies on Tesla. That'd be great, but I doubt it. In any event, so I digress, everybody, but that is something interesting. The reason I'm spending a little bit of time with you on that, because if you look at the currency markets, they're just a mess, right? Look at all the currencies, look at the yen, look at the euro, British pound, just chop, nothing going on there. So that whole set of markets, maybe that changes tomorrow. That whole set of markets is just not conducive. And it's just problematic. So we've been we've been just sitting on the sidelines with any of the currencies. Yen kind of looks interesting if it keeps going lower. I think I mentioned that. Similar with the metals. I mean, you look at gold, you look at copper, silver kind of moving a little bit. So that's actually looking a little bit better, shaping up. I want to actually buy some SLV. As silver comes down a little bit, I'm going to use SLV rather than the futures market on that. So we are probably going to get long SLV around the 20 mark on if you look at that. Okay. Grain's been interesting. As I mentioned the other day, we got a big grain report coming out on Friday. We got rollover happening in across the grain markets. We got wheat going to September, corn going to December, and soybeans going to November. And right now the charts, depending on what charting service you're using, it's a little bit tricky. If you're using contract specific charts, there have been some really great levels. If you know what I'm talking about, contract specific, if you just pull up SX, like SX23, you can see some great levels on that, or even WU23, just the contract specific. You're having some pretty good levels on that. Um, so if you haven't looked at contract specific charts, especially during rollover, you'll actually discover some really good looking levels in those type of charts as well, which I've been transitioning to, especially during rollover. And because Thinkorswim takes forever to transition these charts, so I had to adapt. Unfortunately, some of these charting with Thinkorswim, you don't have a choice as opposed to like with some of the other trading platforms. You can customize charts and all that. Unfortunately, Thinkorswim doesn't do that, so I have to basically I'm at their mercy to when they decide to change the charts, right? When the transition happens. So in any event, it is what it is, and we just adapt, right? There's always something, right? There's always pros and cons to every platform. We can sit here and, this and that, whatever. It is what it is. Yeah, so that pretty much, again, that pretty much wraps it up, everybody. I mean, we've had a lot of chop. I think what holds the key, even as we speak right now, bonds are, I think rates still hold the key. If we get a strong reaction from the bond market tomorrow, I think that's going to create some volatility. And again, watch that 5-year and the 10-year. The 2 years already broke down to a new low from that prior pivot. So I think that really is interesting, and that will also move the dollar. So all of these things kind of working together is going to be interesting. Today, I have to tell you, I mean, today was I think what we just basically was just a kind of a short covering rally where as I mentioned on Friday, and I've been talking to my members. It's just been a slow grinding lower, which again basically signals there is no intensive selling. I even wrote about it over the weekend. By the way, if you don't have my newsletter, talk about the selling. Clearly, there isn't a lot of selling. You can see that on the charts. You can see the way that the market was moving lower, just in a very kind of meandering fashion, which basically is more apathy, maybe a little bit of profit taking, but clearly you did not see any intense selling on the charts, which would look for like some really strong daily bars or something. The NASDAQ kind of had that a little bit, but not so with the S&P and some of the S&P, the broader average rather than the NASDAQ 100. So whether that changes coming up, we'll see. I still the VIX at 13. There's a chance it maybe goes down into another new low, but still not enough to get anybody worried. And we're going to come into next week is going to be probably really light volume because we got 4th of July, middle of the week on Tuesday. And then after that, I do believe we're going to start getting some pre-announcements. We end the quarter this Friday. And I think, we'll start getting some pre-announcement, and we'll see how that goes. But for now, we trade the market that we have, not the market that we want. There's still tons of opportunities in the grain markets. I think still there's opportunities in individual stocks. Tesla, we got some earnings coming out with MU tomorrow. We've got Nike on Thursday, STZ, Constellation Brand on Friday. So there's some opportunities there. And we'll be focused on those opportunities like we did last week with some of these stocks. So there's always something to do, but you got to have those strategies. Again, just a quick reminder, if you're interested in looking into the class, hit the link below. It is about long-term investing. I call it preserving and growing your nest egg. I'm going to cover 4 topics, just so you know. I'm going to cover SPY, dollar cost averaging. I'm going to cover covered call writing to generate income off of positions you already have in your 401k or your retirement account. I'm going to cover a set of sector ETFs, and also going to talk about how you can ladder which is something I've been really talking to my members about, especially those that have some substantial nest eggs, about buying and laddering T-bills. At right now with the 1 month, 3 month, 6 month bills paying over 5.5%, you got to take advantage of that. And if you want to go out a little bit longer, I think you'll actually have some capital gains, because if you buy some, longer dated treasuries, if the economy slows down at the end of the year, those rates will start coming down, and you'll actually have some capital gains in that situation. So if you want to learn about all that, check out the link below. Again, the class is on Thursday at 4 o'clock Pacific. If you can't attend it, we'll send you the recording. It's not a big deal. And it is a month-long class. We do classes every week. Okay. All right, everybody. Have a great rest of your week, and I'll see you on Friday. Take care. Bye-bye.